it's important to talk about where you see the pain coming from. It could be all of the above, but is it the unwind of carry trade? Is it actual recession that the market is thinking about, or just a growth scare and a very good opportunity to sort of undo some of the leverage trades?
Good morning, Sherry. Yes, very good question. I think if you want to think about the catalysts, then obviously we've got the jobs report in the United States last week. But add to that the carry trade, extended valuations, the geopolitical situation. All of these are questions on the minds of investors. And when there's uncertainty, there's volatility. So in terms of the catalysts, these 4 or 5 sum it up. If you want to try and pinpoint the pain on a single one of those, I would say it's the combination, and it's the timing, and it's the simultaneous occurrence of all of those, which probably led us to where we are today. Now, if you think of it in terms of taking a step back and why we are here, I would say that markets move on a combination of 3 things, mostly fundamentals, valuations, and sentiment. And with all the catalysts that we've discussed, there are questions about fundamentals, i.e. the recession and where the economy is going. There are questions about valuation, i.e. is the market extended, and are these valuations justified? And there are now, questions about the sentiment, i.e., is it time to take money off the table?
Right.
So you combine all of those, and you get what we're having.
You say the current move seems overdone, but you don't recommend buying into this weakness right now. So what do? Watching this bruising session one day and then some remarkable rebound?
Yeah, so, why is it overdone, first of all? I think the reason why it's overdone, slightly in my opinion, is that, this move is based on wide expectations of a recession, but the numbers are not are not proving that there is a recession. So this is very, very much expectation. So the market is pricing something which is not today a reality. It's pricing a future expectation, which is why this move might be overdone, and we need to look at further data to confirm. As to what to do in a market like this, I think that what's happening, and it's very visible, is a spike in volatility. So how do you manage the volatility? And I would say that the best weapons in case of volatility for the long-term investor are probably patience and bonds held to maturity if they are of sufficient quality. So yes, patience is going to be a virtue in this market, in my opinion.